Hello, I'm Bernard Hickey with the Daily Briefing from interest.co.nz. Today we'll look at the surprise move by the Fed overnight to cut official interest rates by 75 basis points to 3.5%, and what it means for interest rates and exchange rates here. We'll also look ahead to tomorrow morning when our Reserve Bank is widely expected to hold official interest rates at 8.25%, despite inflation being above its target band. We start with news of an emergency cut in interest rates by the US Federal Reserve overnight. Some would call it a panic cut in rates. The Fed responded to chaos on global financial markets with its surprise move to cut the federal funds target rate by 75 basis points to 3.5%. This was the biggest cut in rates since March 1984 and the first emergency cut since the 9/11 disaster in 2001. Global stock markets rallied immediately after the Fed rate cut, which provided some reassurance that whenever the market gets into serious trouble, then the Fed will bail them out under Bernanke, just as the Fed did under Greenspan. This was called the Greenspan put. It needs to be renamed the Bernanke put. So what does it mean for us? Firstly, stock markets appear to have stabilised for now, but there remains the prospect of even bigger write-downs on bonds if, as now seems likely, the two biggest bond insurers, MBIA and AMBAC, are downgraded from AAA later this week. This would mean the world's banks would have to write down the value of many of the AAA bonds they hold and had insured through these companies. It seems in this part of the world, AMBAC at least, has insured around 20 billion Australian dollars of these bonds. Some are forecasting a further 200 billion US of write-downs on 2.4 trillion of bonds. That would send markets into a spin again, and investors are already anticipating the Fed will cut rates again by a further 25 basis points within the next couple of months. Back here, this latest US cut means New Zealand official interest rates are now back at a record high of 4.75% above US rates. This immediately helped boost the Kiwi dollar back to 76 US cents from the 73 cents it fell to before the Fed cut. If the Fed cuts again, as the market expects, New Zealand rates would be a full 5% above US rates. That can only mean an 80 US cent dollar is back in prospect. This is good news for our Reserve Bank, which would have worried about the inflationary effects of a lower Kiwi dollar, just one day before it is due to make its own announcements on interest rates. Most expected to hold the official cash rate at 8.25% when it makes its decision tomorrow at 9 o'clock. The Reserve Bank has an inflation problem on its hands with the headline rate now over the 3%. That's above the 1 to 3% target band. But the global turmoil and signs of slower domestic inflation should allow it to hold for now. Some are saying more rate hikes are possible later this year, although the consensus is rates are on hold until next year at the earliest. Be watching here at 9 o'clock tomorrow for that key announcement. I'm Bernard Hickey from interest.co.nz with the Daily Briefing. Catch you tomorrow.